Welcome traders to another crypto market update. In this video, we're going to be going over some news topics regarding the crypto market, just some regulatory things, as well as some news topics on an exchange that we'll be going over within the video. And then we'll be going over the price action of Bitcoin, and then looking at the supply and demand of one of the exchanges, Bitmex. And then to finally top it off, we'll go over some of the alts that we are looking to trade to capture that volatility. So to start off, we will go on our Discord and go to our settings, or sorry, our news, not in our settings, but we go to our news, which would be right here. And then we collect our daily news articles that we like to read. We like to kind of keep up on anything that is interesting that we are going to cover would be in here, and it's absolutely free. The news Panda bot that we have within our Discord posts every single relevant news topic within the cryptocurrency sector. So basically, this is a one-stop shop for all things related to do with news-related articles involving cryptocurrencies. So that is the first thing we're going to be going over today. I just pulled up a few things that I thought was pretty interesting. First one we're going to be going over is Baidu and Google. Baidu is the Chinese version of Google. Trend sees increased interest in purchasing Bitcoin. So with so many people around the world working from home, social distancing, and self-quarantine after possible exposure to COVID-19, online searches surrounding cryptocurrencies have gotten a bump. According to a report available on Cointelegraph, the Chinese search engine Baidu has seen a considerable jump in searches for Bitcoin, or BTC. The data index shows searches for BTC increased by 183% over the past 30 days, while the number of those looking for information on the cryptocurrency on mobile devices also shot up. The interest may be related to the theory that global economic meltdown may lead to a growing value for the cryptocurrency as a hedge against the banks. So either way, I think that is pretty positive, seeing individuals get interested in cryptocurrencies, just from being at home, being curious, because it's definitely an interesting topic to think about, and then also the fact that it could also be because of the economic turmoil and the economic uncertainty that we're currently facing globally. And as we can see, Google searches result. That was the Chinese version, so that was on Baidu. That paragraph right here, and then the next one's going to be for Google, so that's kind of the rest of the world here. Google's searches for BTC in the United States had a 30-day high on March 13th. This was shortly after the cryptocurrency experienced its biggest daily drop in the last 7 years, when over $1 billion worth of longs was liquidated. And we'll talk about that within the next couple news articles here talking about Bitmex, but interesting to see that people are getting more interested in cryptocurrencies. Next topic is going to be, let's do this one because it's pretty relevant to what we just talked about. Bitmex defends insurance fund being barely used in BTC price crash. So this is what we were talking about in the previous news article, talking about March 12th being the massive crash that happened that dropped 60%. So we see Bitcoin, BTC, derivative exchange Bitmex, which is one of the exchanges that we used to use. We don't use Bitmex anymore. For people who are using Bitmex, another option would be Bybit. I found that its exchange is a lot more reliable in terms of getting stop losses filled, not getting skipped, being able to actually enter and exit orders when there is volatility, unlike Bitmex, which doesn't really allow you to do that. But it continues to field criticism after attempting to explain a mass liquidation event during which BTC USD crashed over 60% in value. Massive, massive dump. Bitmex insurance fund functioned as normal. So we'll talk about it more. Basically, each exchange has a account that is kind of their insurance. If anything happens, they can pull funds from that account to kind of try to alleviate any difficulties that the company is seeing. So at the time, Bitmex appeared to suffer from what was various sources have called the cascading margin call, forcing out traders and sustaining the price of Bitcoin plummeting in the process. The exchange then went offline for about half an hour, after which the price recovered, which is very scary. Let's say you entered an order, you didn't set a stop loss, you wanted to do something, you had a position in, and it suddenly stops, and you can't do anything for basically half an hour when BTC is more volatile than it's ever been basically for most retail traders. That's a position no one wants to be in. After fending off claims of foul play, Bitmex still faces queries over why its giant insurance fund, a bank of over 35,000 Bitcoin estimated around $205.6 million, was not used to help. Explaining its role, the blog post states that the fund's primary purpose has always remained the same: to prevent auto-deleveraging, ADL, of successful traders' positions, to prevent the bankruptcy of positions that get liquidated. It's important to the fund to be large enough to absorb intraday shocks to avoid ADL, which is auto-deleveraging, on its platform, it summarizes. I don't know, I personally think that making sure the successful traders are not getting auto-deleveraged is less important than making sure the people who are having these massive margin calls happen to them is more important, personally. Obviously, they have their own way of viewing the markets, but in my opinion, it kind of seems like the little guy is getting kind of kicked in the mouth here, while the more successful traders are getting the benefit of getting the funds for the auto-deleveraging. But we'll continue on here. There was some backlash with Twitter-based trader Low Strife argued. The main question I raise here is why the insurance fund, when the worst case scenario almost happened, was barely used. I completely agree. March 12th saw the highest number of liquidations in Bitmex history at 876 million. So we can see the white lines, we can see total daily liquidations was peaking at above 750 million in total daily liquidations, and then the red dots are going to be for sell liquidations. We see a lot right around here, and the green ones, the blue ones, are for the buy. So a little bit sketchy in terms of the legitimacy of the explanation, in my opinion. That's kind of why I don't use Bitmex. I've had troubles in the past where I couldn't get liquidated. I couldn't get filled on orders, and it caused me too much of a headache, and I just didn't screw it. So I just use mainly Binance as well as Bybit as well. But, you know, be safe out there, everyone. It is an exchange that people have had difficulties with, so just fair warning there. So the next news topic, we got two more. This is Mike Novogratz. He is a very well-known kind of figurehead within the cryptocurrency space. He is the founder of Galaxy Digital. Invested fairly early. Literally put he's a billionaire. He's put I don't know, some significant percentage of his net worth in Bitcoin. So he is a massive, massive whale. Probably one of the biggest whales out there. So he said, BTC will continue to be volatile over the next few months, but the macro backdrop is why it was created. This will be and needs to be BTC's year. So I agree with that, with so many fundamental factors coming into play, with banks printing literally trillions of dollars, well, the US anyways, and billions for different countries, or hundreds of millions at least. That's going to be a major factor, as well as basically having no real kind of end in sight here in terms of how long it could go. I do think that I agree it's going to be volatile, it's going to be deflationary until there is somewhat of an end in sight. I think that will kind of create a little bit more confidence in the markets, but until that happens and until that kind of comes into fruition, I don't think that there's going to be a huge bull market. Never let a good crisis go to waste. Bitcoin was always a confidence game. All crypto is, and it appears global confidence is just about anything has evaporated. Yeah, I completely agree. You see gold and silver go down as well. They are actually pumping up, and we will talk about it within the global macro update that we will be doing later on today. But it does look like there is a little bit more surge in buy pressure for gold and silver right now, which could then lead into BTC. Kind of makes sense looking at the fundamental factors of the U.S. literally saying they'll print as much as they have unlimited cash basically. But we'll talk about that within the other update. But overall, Mike is saying that he's super bullish on BTC on the long term, but on the short term, he still thinks that there's going to be some pretty significant volatility to come. So we got to be pretty careful, we got to be conservative, we got to be patient, and we got to size down until we have a better trend of the market. I've been telling everyone to size down in this market because it's volatile. You know, the Fed could literally just say, we are printing X many dollars, and like we saw today, they made an announcement, and then BTC shot up. We were short. One of the trades got taken out. Other trade was able to withstand that push to the upside, and now we're not looking too bad with it. But, you know, these things can happen, especially in very volatile times, so we have to make sure that we are giving more room, lowering our position size, and just giving more room so the price can move and have a little bit more space to play around. Last thing, we can see, taking notes of Bitcoin's apparent decoupling from the COVID-stricken traditional markets earlier this week. This is the CEO of crypto. I call him Champagne Zhao. The CEO of exchange has similarly argued that the pandemic should be understood as a trigger rather than a root cause of a visibly fragile world economic order. So that is definitely something to take into consideration, considering a lot of these people who are in very, very high roles of major exchanges, major hedge funds. They're all kind of seeing a similar outlook as we are within a community of our Discord. So it's good to see. Last, final topic that we're going to be going over today. This is actually very interesting. I don't know how it's going to play out, but basically I'll kind of give you a rundown and then we'll go into it. This exchange is trying to create a community where you can create bots and algorithms to trade for you, and then you can lend those or rent those bots and algorithms out. And also they're trying to help with the ease of a novice trader getting into the market. So it's going to be very interesting to see how this plays out. And let's dive into it here. There's definitely a little bit more to talk about, but we'll try to go a little bit quicker here. So Upbots is going to be the exchange or the platform. Its mission is to become a preferred platform for beginners and professional traders alike. The service aspires to deliver a low learning curve for those who are new to cryptocurrencies or trading in general, with risk management tools designed to keep capital safe and reduce the risk of falling victims to scam. Very important. We're very we really try to kind of, how do I say this nicely? I'm just going to say, we drill into people that risk management is key. Maybe that doesn't sound too bad, but we do everything we can to ensure that we are trying to explain how important risk management is to all our students. So I completely agree with this. A comprehensive training section enables users to learn and grow at their own pace with in-depth resources that are beneficial to more seasoned enthusiasts. Upbots also says it delivers a blockchain-based web and mobile trading platform that links to major exchanges. So that's pretty interesting. We'll see how it plays out in terms of the education. Is it super basic, or is it actually going to be able to provide more of an in-depth environment where people can learn other than the basics of what's an RSI, what's a trend, you know, more in-depth stuff, more of a system and approach to actually looking at how to trade, not just like charts itself, but how to become a trader. Users have the freedom to rely on a complete set of sophisticated tools and strategies, and for those who prefer to develop their own algorithms, a bot creator section enables new algorithms to be created at will. This to me is very exciting because I personally have no experience in creating a bot or creating an algorithm. I have very limited experience with understanding the process, but I personally have never gone through and actually created a bot. So I think I will be interested in actually diving into potentially creating one when this exchange actually opens. Successful bots can also be rented out to others, and a social copy trading tool offers a much needed bridge between established traders and newcomers. So that's also very interesting. You can rent out your bot after you've back tested it and successfully seen this bot produce a profitable monthly recurring income for 6 months, 4 months, or whatever you're looking for a time period. So very interesting. They got a lot of ambition here. Enhancing the crypto trading experience. The Upbot emphasizes it is The Upbots emphasizes it is attempting to tackle one of the biggest hurdles to mainstream adoption that exists today, which is inexperienced traders. They enter into trades without strategy, embrace inadequate risk management tools, and often maintain an inferior risk-reward ratio. 100%. Very, very true. And Upbot is going to be focusing on the crypto market initially, but they have high ambition, and they are offering the same levels of accessibility across Forex and commodities as well, enabling consumers who are interested in these asset classes to get involved in a meaningful way without requiring years of training or experience. So one thing just to note is just get involved in a meaningful way without requiring years of training and experience. So if you are, for example, you are just opening a new platform and you see the highest bot on the exchange is doing really well, and you put money, you rent out the bot, and you put money towards it, and you're making money. That's a way to get price appreciation, grow your portfolio. But at the end of the day, you are completely relying on that algorithm to make those trades for you, unless you are able to understand that algorithm and then recreate it and then tweak it so then you are able to understand what the inputs are for the algorithm to give you the output of profitability. Then you're able to kind of steer your way away from the sheep and become your own boss. But until that happens, if you're relying on other people, you will not be able to grow and learn as an individual and as a trader, because you don't know what you need to improve on. So I really hope for the people who are looking at this, if you are pursuing other endeavors and trading as like a side hustle hobby, I think this is a great opportunity. But for people who are actually wanting to grow their portfolio and become more of an active investor or trader, I do think that this could be a shortcut that may be beneficial in the short term, but I think a lot of people might be too reliant on it. But I think that having all this to help up-and-coming traders is a really great offer and a great opportunity, in my opinion. But I'm personally interested in creation of the algos. Based on blockchain, Upbot says that the major point difference between its platform and those offered by competitors lies in how it's based on blockchain. To ensure the platform runs seamlessly, Upbots have created a new token called UBXT. This will be used to pay for the fees associated with copy trading, bots, and referrals, and the company says it is the best way to offer a completely decentralized and honest trading service. This is going to be interesting. A private sale is initially going to be held with UBXT priced at 1 cent. This round will have a hard capital of $500,000, $500,000, and 6-month locking period. What does this mean? You cannot sell your coins for 6 months. Just like an IPO, an initial public offering, for the pre-IPO investors who invested before the IPO, there's going to be a lockup period for any venture capitalists or private equity firms, for Uber, Lyft, Beyond Meat, all these big IPOs. There was private investors who were on board funding it from Series A all the way, right? So they already have shares in the company, and when it goes public, well, then they have liquidity and they can cash out if they want. They didn't have that option beforehand. Same as this. If you buy at 0.01, you have no liquidity until there's a market, until there is an exchange and there's bid and asks buying and selling this asset. There's going to be no liquidity, and this 6-month locking period is going to be basically, you cannot sell whatever amount of money you put into this asset for 6 months. And then after that 6 months, hopefully there's liquidity, and hopefully there are areas within exchanges that you're able to sell this if you would like. But I think this is a very interesting opportunity. After this, community sale will be held at hardcap $250 for 4-month locking period. So it's an opportunity. It's an ICO, I believe, and it's a coin. Well, it is an ICO because they're offering a coin. But I'll do more digging into it because this is an opportunity. We don't really see ICOs too often, but this is an exchange token like Binance Coin. So I do think that it will have a lot of value if this Upbots becomes relevant in the retail trading space. That will be something that would be very, very interesting to potentially invest in. So we'll dig into this and actually probably do a review on if this is an opportunity that would be interesting. I personally don't love investing in something without something of a chart, I understand, but we'll get into it a little bit later in probably another video. The first version of Upbots dashboard is set to launch in the second half of 2020, paving the way for the company's mobile application to launch in early 2021. So definitely we got a little bit of ways before anything really foundational is going to be coming in. But it's still interesting nonetheless, and it'll be interesting to see how it plays out as time goes on here. So that is the news topics. Hopefully you enjoyed it. The next thing we are going to be looking at is the BTC market updates. So let's go to the larger time frames and then zoom back in. We see we got a pretty significant surge of buy volume here because of the Fed basically saying that they're going to print unlimited amounts of currency in order to support the American citizens, which they don't really have an option. They kind of have to do whatever it takes in order to support their citizens, because we'll talk about it in the global macro update, but there are going to be millions of people having job claims and looking for EI or unemployment insurance. Millions, 2.25 million. That's what they're saying. So yeah, it'll be interesting to see how gold, silver, and cryptocurrencies will react to this upcoming looming potential depression, definitely a recession. All right, so let's go and break down the monthly for a little bit, and then mainly going to talk about the weekly here because obviously it's a new week. Got the nice Monday morning. So we got 8 days left on March. So we got a little bit of time here. It does look like we are holding this zone, as we can see. Key level of support. Now, we could draw it in different locations, but at the end of the day, it does look like it's holding around that zone, which is good. And it's just a matter of if we're going to hold around 6. I personally do not think we will, but that's basically all I have left for that. What I think I'm going to do is just take off some of these like so, and then also I'm not going to have that 200 or the 50 EMA, and then I'm going to go and draw our triangle. As we can see right here, this is on the weekly very, very well. As we can see, this major large symmetrical triangle that we currently are holding, and let's just put that right there. I'm just trying to find the best fit line for our trade here. So I think that might be it. Let's just close this, because we see it's obviously it's a monthly chart. If we go on the weekly, we might actually be able to have a little bit more of a refined line. Let's analyze. Yep, I'm happy with that zone. Very, very similar to the weekly chart. I don't even think I'm gonna have this, to be honest, because it might go like this. You know, this major support zone, I'm very, very open to shifting in a way, kind of like that. So it's a best fit line. I am going to take that off right now, just so we have a good understanding of kind of the larger monthly time frame that we're looking at. So that's our best fit line. I'm pretty happy with that triangle. We're currently at our level of support. I do think that we are going to be testing this zone a little bit further, but this is the major structural pattern that I currently see, is this major symmetrical triangle. I think that we will be able to hold a higher low above this zone like so, in my personal opinion. That's going to be the low there. I think we are able to hold at these lows here, maybe get another test of the 41, but that's my personal view of the market. And if it drops below, then so be it. We will have another potential level of support below the zone, like so. So we got a couple of options for potential areas of support. We're not going to try to call the bottom. I think that's what a lot of people are, maybe not a lot of people, but some people who don't really understand market structure will say, I'm going to buy exactly at 4,200 and it's going to be the bottom because I did all my technical analysis and it's going to hit right there and jump straight back up. Well, most of the time it's probably not going to do that. It's going to go a little bit too far. It's not going to go there. It just does not make sense to have no real plan in terms of picking a direction. So we wait for market structure and price action to give us confirmation for a shift in trend. But on the monthly, we'll see this on the weekly because it's a lot more clear to see on the weekly in terms of the price action. But we push down, we're pulling back up here, making a lower high, and I think we will come back down to test that low there. So on the monthly, it's pretty hard to tell, but on the weekly, I do think that it is a lot easier to see. So let's get our snip and then discuss the weekly chart. So like I said, we got our anchor point, and then we got our first touch, second touch, third touch, very valid zone for the descending area. We got our anchor point right here. We got 1, 2, and this is our third. So we got a nice squeeze here within the price action. And what do we see right now? We saw a bounce off the ascending level of support, and we're getting a rejection right here from the previous support, which is now going to be a new level of resistance. So right now, in my opinion, I think we're going to go from up here because we're still holding an ascending wedge like that. We kind of want like that. We're kind of here. So we broke the ascending wedge, but we're still at a resistance, and we haven't made that massive move to the downside yet, really. We actually shot up a little bit this morning. So we haven't really broken the zone yet, but it does look like we are forming a bit of an ascending wedge here, and then we could see another fall back down to around this zone. And it's just a matter of if we're going to hold it, holding our major structural level of support for the ascending support right here, or if we're going to fall back down, and then we would have to kind of take a look at our overall structure a little bit more. We could move this to here, and then that would shift this down here, so then that could be the area of support. That's something that we could do, but as of now, I'm pretty happy with where the current outline of the structure is, which would be right here, and which would be right here. So we're just basically at the low of the structure right now. So we're going to be being cautious, but that's the overall outlook, is this nice little ascending wedge right here is what we're looking for. So that's the weekly. The CME futures on the Chicago Mercantile didn't really gap or anything. Let's look at the 4-hour. No real major gaps to really talk about on the 4-hour or daily or anything. So not really too much to discuss on this exchange. Let's go back to the 4-hour because we're just chilling. Really mainly just looking at the gaps on this exchange. And this is the Gemini daily chart. Already talked about this as a major level of resistance on basically every other video, every other crypto market that we've seen. So initially, yeah, we did short here and we did get stopped out, but we can see our actual area of resistance is pretty well bang on. We can see that there's wicks projecting up a bit, but at the end of the day, we're not seeing the price go above this zone and hold on the daily chart. So this level of around 64, 65 is a significant level of resistance. We have to understand that. It's a confluent zone, and we can see that there's a lot of sell pressure within this area. And what we can see right here, and what I'm currently looking at on the smaller time frames, is this potential price action pattern is we see a push down. We're seeing a wedge like this, maybe not like that. Anchor point from here, and then you see a nice wedge like that, and then you're seeing another wedge like that. So it's not perfect on the daily, but this is kind of what I'm looking at. And then we see a lot of sell pressure right here, as we can see with the wicks, as well as the confluent zone. So it's a nice wedge, and I think that having a nice little pullback, previous level of support, testing that again, would not be too far off for a potential opportunity that we could be capturing. We've been having this bias for a little while, been patient, but it's just not coming down. It's remaining to hold above that zone. So we're currently seeing a nice level of resistance turning into a new level of support, which is, yeah, more bullish in that structure right there. I do agree with that. And if we do break this zone, I think that we could get another strong bullish push up because there's a lot of sellers around this area, I'm sure. I got out for my short of BTC, but I'm sure there's people still selling around this area. If it does go back up, we do have the next key zone around 7,800. We also have this descending zone, potentially create a confluent zone as well. We have the high, lower high, lower high, lower high, so creating a confluence zone around the $77-ish $100 level of resistance. That's going to be the next level if we do break this zone. And if we fall, next level of support is around 48. So that's where we're currently at on the daily chart. Hopefully that gives you a good understanding of where we currently are on the overall outlook. So this is that ascending wedge I was talking about. And we pushed up here. So let's just talk about market structure. This 6K support has just not been able to break. Support, resistance, resistance, support, support, support. It's just not been able to break. We had a break in our ascending zone. We can see right here, we see our anchor point. 1, 2, 3, 4, 5. And then we broke down, pulled back, validating previous supports as new level of resistance. Looking really, really phenomenal. I was expecting the price to fall and break below the 6K zone, but unfortunately it did not. It got rejected and pushed back up, surprisingly. So we know that this 6K zone is very, very strong, and it was a previous resistance, new level of support. It's looking less ideal for sure. The short is still in play because we still have a resistance here. In terms of, oh, I just opened something I shouldn't have here. Give me one moment. In terms of where we currently are, this line right here is still in play for a resistance, as we can see. And then this line is also in play for another level of resistance, right? Because there's a support, it broke, now it's going to be a new level of resistance. So this zone right here is a strong level of sell pressure. We also haven't broken the high. And this horizontal zone is going to be another level where price is kind of hesitating to go above. So we still do see that the price is holding below our main area. But if it does go above right here, I'm probably going to say that this ascending wedge is just not able to push the price down, because this was our first attempt. I was a little surprised we didn't break this zone. And if we go above our major level where we currently are, that is going to be my final kind of goodbye of this price action pattern, and I'll have to kind of reassess the overall market. But if it sticks below this area, I know that the trade is still valid, and the short, in my opinion, is still a potential opportunity. So finally, on the 1 hour chart here, let's make it a nice structure like so, and then pull this back a little bit. Let's pull that back. Okay, I'm pretty happy with where all the lines are. So this is the 1 hour chart. We see same thing. Our resistance supported pretty well. Got a fake out there. So this was the initial trade. We had the double top right here, and then we had an ascending zone right here, squeeze. This was a bit of an ascending wedge at the top of a major resistance, and it cracked down, retested, and that's where we entered at the major resistance. So it looked pretty good of a potential trade. Unfortunately, it didn't play out because we went here and then we went back up, but that's how it goes. It's okay. And then we came crashing back down into the wedge. That was a little bit frustrating. And then we came back and kind of played around with it, and then we broke below the wedge, retested previous support as a new level of resistance right around here. As you can see, not perfect, but previous level of support, previous level of support, new level of resistance, new level of resistance. It rejected twice, and that second rejection really gave us that indication that we could be seeing some sell pressure to come, which is that area right around here. Once that came in, and then we saw the lower high, I was like, okay, this is going to look like it's kind of coming down, but it didn't, right? It didn't. It held. Once it held, and then there was some bullish news, I guess, from the Fed, we got our pump up. And then now we're still below this zone. It's a zone of confluence because we see the last final horizontal zone of resistance right here at around 64 is in confluence with our ascending zone, as we can see right here. So it's still in my opinion, bearish territory, but if it goes above our 64 level, I'm just going to take out this ascending support and take out this and look at it in a different way, because clearly it's just not able to push the price down, and I'll be actually looking for longs because this is a pretty damn good pattern in my opinion. Look at that support. We see a very clear, very bottom anchor point, and that's what we're looking for. We see 1, 2, 3, 4, and then we see a rejection first and then second rejection. So we see two rejections off there. validating that zone. So in my opinion, that was a pretty damn good setup, and it still looks like a potential opportunity for our shorts, but it's not looking ideal. It's not looking as good as what we had, I think, a day or two ago. All right, I got some water there. Now going to the shorts and longs. So what this is representing is the amount of long positions that are opened on margin on the Bitmex exchange for the top chart, and then vice versa for the shorts on the bottom chart is going to be the total amount of margin shorts that are opened on Bitmex. And we can see that the shorts have been gaining confidence or have been seeing more short positions opened. You can see it broke through kind of the recent highs that we've seen for the shorts. So it's made a new high. That's more bullish for the shorts. It's more confidence for the shorts. And we can see strong level of support all along here, strong level of resistance all along here, and it could come up again to make that previous level of resistance a new level of support, which would be more confidence for the sellers. And then same thing, but opposite for the buyers. Previous level of resistance right here turned into a new level of support with lots of volume coming in. And then once we got the confidence loss basically from the dump from 10K, we now are seeing the sellers gain more confidence, and the buyers are again not able to push the price, not able to get more margin longs open above this zone. So now we're kind of in a consolidation where buyers aren't really opening many long positions. So not a lot of room for any real squeezes, because there'd be a lot of short sellers if we were looking for a short squeeze, but there's just a low amount of buy interest compared to some other times. Obviously, we do see price appreciation in terms of the asset price, so there is interest, but there are still sellers coming into the market. I don't think that we're going to start our bull run, in my personal opinion. I do think that we're going to have more bearish momentum come in before we hit back where we were back in 2019 here, the 10s and the 9s and all that stuff. So I think the bearish momentum is still going to come a little bit further, and inevitably we will break out of it, but it's just a matter of when. So that is the analysis for BTC. Hopefully you enjoyed it. Gonna get a little bit of coffee, and then we'll go on to the different alts that we are looking at. All right. So next thing we're going to be looking at is the alts here. Starting off is Ethereum. Quick look at gold and silver here. They're actually doing very well, so it kind of makes sense potentially that the crypto market is doing a little better. But don't want to trade just based off of precious metals, especially like intraday moves, really. So this is Ethereum. Basically, for a major macro look, we looked at the daily and weekly yesterday for Ethereum, but basically we have a series of higher lows, as we can see, with a horizontal level we've been holding right around there. We did get a push up previous times, but I'm really looking at this 137-ish range for resistance, and we're seeing higher lows. We broke the ascending zone, we pushed down, we held a support, and we tested a previous support as a new level of resistance. I thought it was going to go down like BTC, but it shot up here, retesting our resistance, not loving the price coming all the way back up here. I did not get stopped out, so I'm still in the trade. I'm still holding. It's just a matter of we're going to hopefully see the price come back down here after this break. I did think that this trend line was a fairly respected zone. We see 1, 2, 3, 4, 5, 6. So 4 touches is a dependable zone for me. And we see more than that, so it is a dependable zone in my opinion. And we're just testing these zones one more time. Hopefully before we get a major move to the downside. We got our first take profit right here. Second take profit at around $85, because that's the low of Ethereum of 2018 when Bitcoin was at 3.2K. Ethereum was around $85, which sounds crazy that it's under $100, but Gotta look at the price action, not the actual price, especially when markets are in panic mode. Don't want to be looking at a price saying this is super cheap, because it could drop who knows how much more. So that's basically the trade for Ethereum. There's not a whole lot changed there. My bias is exactly the same, so I'm not really going to be changing my ideas or my thought process, because even with the new price action, my bias is exactly the same, basically. All right, this is XRP. Let's go to the 4 hour here. Same thing, we were drawing an ascending wedge, which it does look like it is. It pushed to the downside, retesting the previous support as a new level of resistance. We saw another minor, small, little trend line here, an ascending triangle pattern. We broke out. We tested this level of support right around here. We were able to hold it. So now we're kind of in a trending mark here, where this is the resistance. But the fact that we didn't push down further just makes me feel like there's confidence in the buyers, to be completely honest. Which isn't necessarily a bad thing, but it's making me not want to short as much, because just looking at where the current price is now, double top, let's look at the smaller time frames. There's probably a bearish engulfing candle with a no demand. Not really. This is a no demand right here, but it's not really at the top. Like, seeing the top candle, no demand would be an ideal situation. But, you know, this is a potential trade that we could drop right here, and then hopefully it passes this zone. We'd be looking at potential take profits at around here for another short opportunity if we are looking for it. But we would want to really make sure that our bias is hopefully correct, because we already have Ethereum still in play. So still looking at XRP as a short, not looking at longing XRP just yet. Link is a little bit more interesting for a long, but XRP currently still for me is not. I'm not entering this just yet. I will notify premium members if I do, but these trades in this volatile market has been definitely a little bit more challenging with market news coming in. For example, today the Fed announced that they will print literally as much as they need in order to save the economy, which is good for the people that are currently suffering. Not good for inflation in the long term, and is good for assets that have a fixed amount of supply, like gold, silver, and Bitcoin and other cryptocurrencies. So it's kind of why we saw the pump, in my opinion. So during market crises, there's going to be a lot of economic news, and it's going to affect the price here, so we got to make sure that we are giving price room. Ethereum gave a lot of room, like 9% is a lot of room, and we're still able to hold that trade, and it's looking a lot more favorable now. So we just need to ensure that we are giving the price more than enough room when we are entering trades. All right, Link for me is just, actually we took a trade on this, took an L. This was the entry right here. We got a little bit of a pop up right here, and then a 15-minute we had a little bit of a bearish engulfing candle right here with a no demand, and then a pushing down of the sellers. So then we thought this was a really good entry for a pullback, because this was a really nice head and shoulders, as we can see. If you can't see it, there's a double right shoulder, mind you, so you might not see it, but hopefully you're able to understand. This is the left shoulder, right? This is the head, double top head, and this is the right shoulder. So you get a right shoulder, but it didn't break, it came back. So you can have two tests here. This theoretical right shoulder had 1 and then a 2, held this right shoulder and then pushed down, and then we were looking for a pullback. This was the pullback, and we entered right here, stop loss right here. We were expecting the price to get down to these lows here, ideally. Got stuffed at this key level of resistance. We could not get the price to go down, but that was the overall outlook for this trade. We saw the double right shoulder get rejected, 1, 2. We drew a trend line in from that zone. We were hoping to see, even if it squeezed, even if it squeezed and held the support that it did hold for a little bit, I was hoping to see this descending zone hold the price down. So even if it did hold this zone, we get another squeeze, and hopefully we would have got that dump down, but unfortunately we did not get that to happen. So that's unfortunate, it happens, but the fact that we are now above this zone makes me a little bit more bullish. But BTC is looking like it's not in a great situation, so I'm not looking to long. But that was a trade overall. Right now, I'm not really sure exactly which way it's going to go or anything. I thought I had a good trade, but clearly it did not yield me positive results. So we're just going to sit and wait, basically. Let's just see if this... Yeah, even that trend line. Like, that was a pretty fucking good entry, I thought. But it happens. That's not a problem. Theoretically, if I guess we're gonna draw this trend line, I could have put my stop loss a little bit higher up here. But you know that risk rewards 1.4 to the major level of support, so it wasn't ideal. It's okay. I'm happy with that overall trade, even though it was a loss. You can't get mad at yourself for every single trade. So that is Link. At this point in time, not really interested in entering Link as of now. Not much more to add on this because I don't really see an entry I can clearly identify. So I'm gonna get some coffee and then we'll go on to BNB. Really quickly, because they're all the same, like BNB and EOS. EOS actually has not yet broken its ascending trend line, as you can see. So that's something to consider, but BNB has, and it's in a very similar position, right at kind of the resistance zone right around here. So it's just a matter of if we're going to break or not. But we're already looking at potentially XRP, and we're already in Ethereum. So there's not a whole lot of action that needs to be taken at this point in time. So that's BNB. Similar structure, main level of resistance around $13, $14, $13.50 to $14. Very significant level of resistance. And EOS is kind of not doing anything I'm really interested in other than this ascending zone. That's kind of the only thing I'm interested in for EOS at this time. I don't really see anything else that I absolutely love. So that's basically the trade. I could draw this zone right here. So it's a bit of a squeeze here. We could see on the hour chart, you know, if we break to the upside, that could be an opportunity. We just have to be mindful of this potential descending zone and the horizontal zone that we will probably see right around here. So we got a mid-range zone, a support zone around $1.70, and a resistance zone around $2.50. But you know, if you come back here, pull back a little bit, that's a pretty solid move, 9%. If we're looking at the 15 or 5 minute, that's a potential little push that we could see on a minor level. It's not a scalp because it's like a 6-7% trade, right? But if you're risking 1.5-ish%, if you're taking 5% home, that's a great risk reward trade. So, you know, we're looking for 2.5, 3.5 risk reward. 4 is obviously great, but that's in this market pushing it a little bit, in my opinion. I'm looking for a little bit less ideal risk reward because it's more volatile, it's more uncertain, and then when we get more of a trending market, we can have a better risk reward situation. But different market structures have to have different ways of trading. You're not going to trade a consolidation the same as you're going to be trading a major bull market, obviously. So that is the overall crypto market update. Hopefully everyone enjoyed it. If you have any questions, drop them in the comment section below. We will be doing a economic global macro update, so we're going over things like gold, silver, SPY, US dollars, stuff like that. That is more pertaining to the different asset classes, not just cryptocurrency, because in this market, it's very important, in my opinion, to understand what other asset classes are doing. We also look at oil and commodities and whatnot. So thank you very much for watching, and until next time, happy trading, everyone.